Hey, good afternoon, everyone. Hey, James, how's it going? Good to see you. It was a pretty interesting day in the markets today, or at least we got some direction instead of some chop, right? It's been a little while since we got a good amount of directionality in the markets, but today we got some. You can see that we pulled back almost all the way to the EMA 8. Didn't quite get there, but it was very, very, very close and close enough like to count it as a pullback to the EMA 8. So what we want to see now is whether or not this becomes a deeper pullback to the EMA 20. We don't necessarily think so. It's a little soon for since we just visited, but as we saw over here, it could happen, right? We could pull back to the EMA 20. So tomorrow, I'm just waiting to see whether or not that's going to happen. It actually looks really similar, right? We bounced right here, and then we went back up over the EMA 8. We didn't make it terribly far up here. We came and touched very close to the EMA 8. Then the next day we gapped down to the EMA 20. Or actually this time it was below EMA 20 and traded back up. So this situation is actually very, very, very similar to this one. So we'll see. Tomorrow does have the possibility of us seeing a break of the EMA 8 and testing of the EMA 20, and it may even be this time testing the MA 50. So let's take a look at why isn't that moving? That's weird. Okay, I want to see about that distance from the MA 50. Hey Barry, good to see you. Hey TP, Tim, Stacy, and Marlon. Good to see you guys. Okay, let's see right here. The distance to the MA 50. We haven't actually come back to the MA 50 at all. We were actually wider over here, but that's the beginning. That doesn't really count. So let's compare these few instances over here. So here was about 3.5%. Here was 3.13%. Here was 2.5%. Here was, messed that up. Okay, almost 3.1, 3.3%. And now we're at 3%. Okay, so it's been relatively stable. A pullback to the EMA 20 has occurred right around this 3% level. And MA 50, we haven't gotten like to the point where it was really stretched out versus the MA 50. So it could continue to go upwards. At some point, we do need to visit that MA 50, either as a break of this trend or as a bounce and continuation. So we'll see. Normally, at least in the last couple of years, we've been on a pretty big bull run. We would visit the MA 50. So we'll see about this time. I don't know yet if it's a pullback to the EMA 20 or a MA 50 or the EMA 8. We could just hit that EMA 8 and keep on going. We'll just see. Right now, there's not a huge number of catalysts in the market, and there's less data than we normally get because government shut down and we're not releasing as many reports. Some are still being released, but not all of them. So it's a big wait and see. Nothing is really certain at this moment, or at least nothing is ever certain, but we're not getting a lot of clues, I should say, ahead of time as to where it might go. Okay, so one of the things that came up yesterday that just out of the, spontaneously was this idea of, hey, maybe I'll help or I'll give you an example of a portfolio that starting from $5,000, just like we've been talking about the small portfolio construction. And I just do an example of that. So I did go ahead and throw in a dummy trade today so I could get this adjust account button. So let's go ahead and change that to 5,000. Is that 50,000? Yeah, 5,000. Okay. So 5,000 options buying power and net liquidity. Okay, so $5,000 account starting out with no position. This is just nothing. Okay, zero quantity. So we can start this portfolio construction and see how we might go about actually creating, at least the beginning steps of creating the portfolio. And depending on how we feel and the things that we want to learn about, maybe this could be an ongoing thing. The only thing that is a little tricky is that it's post-market, right? So I can never look at the markets live with you guys and decide on positions. Everything has to be after the fact, and then maybe it actually gets traded or not the next day. The market conditions may not be ideal for entry. If we decide on an entry now, I will never get ideal exit, especially if we're using a system where I don't know the profit target ahead of time. So I don't know how well this experiment is going to work in terms of actually building a portfolio and tracking it. But at least we can build the long short portfolio together. You can see how I'm constructing it and the things that I'm considering when I'm constructing it, just not necessarily the best at tracking the performance. It's definitely going to not perform as well as if we were doing this during the day and we could see the movements and actually track the real exit and the real entry, rather than just making all the decisions post-market all the time. So we'll see. Maybe I'll give it a couple weeks and see how it goes. And if it just way off of actual performance, then, well, we'll just kind of forget about it. Hey, what happened to GX? Thought it was a mixed bag. It started out as a mixed bag during the day, yes. So if we look at what I sent out, I said that it looked very similar to yesterday, actually. And then later in the day, it got more and more like this. Okay, and actually, 669, 670, 671. We had just imagine this was higher, and this was always pretty low. And then just imagine the strikes below 669 were a little bit higher. So you had a nice smooth curve like this, and 670 was a little bit higher, and then we had a nice smooth curve like this. Can I draw on this? I wonder. No, I guess I can't. Nope. So you'll just have to follow the movement of my mouse. Okay, so just a curve like this and a curve like this. By that time, the markets were already there, so I didn't, and that was during the day, right here. We had already sold off. By the time I noticed it, it was already over here. So I didn't bother updating anyone, because the market, it didn't help anyone with the move, because my attention was drawn elsewhere, and so I didn't bother updating anyone. From there, we just chopped sideways for the most part. We found a bottom near that EMA 8, and then we chopped sideways and recovered a tiny bit by the end of the day. Yeah, so you can't always, well, number one, nothing is ever 100%. So just because you have a good indicator, it's not going to indicate perfectly 100% of the time. Plus, intraday, things can change. Now, the levels on the GEX is generally really good. And in the morning, it has very good predictive power for how the day is going to go and how we end up the day. But it's not perfect, just like anything else. And it does change throughout. It has the possibility of changing throughout the day as well. Would today's market movement taking you from a 2 to 1 on a bullish scale that we're talking about? No, no. What I told you guys was that if we move down to the EMA 8 or EMA 20, I'd actually go to a 3. I'd actually be more bullish. So if anything, at the moment, this is pushing me more close to an 8, not a 1, okay? I'll pull back to the EMA 8 and a bounce is normal. I pull back to the EMA 8 and a bounce, that's normal. So I should still be a 2 or a 3. But right now I'm a 2. I'm still a 2. And we get to the EMA 20 and that holds and a confirmation bar. Remember, that was a very important distinction that I made yesterday. Not just that it comes to the EMA 20, but I get the confirmation bar afterwards. Okay, EMA 20. Oh, that would be I'd be almost a confirmation bar. This would be a clear confirmation bar for me. Okay, EMA 20 confirmation bar. Why did I say not this one? Is because my criteria for a confirmation is a green bar that closes above the previous day high, and most of the time, depending on the distance between the EMA 8 and the EMA 20, it also should close above the EMA 8. So over here, EMA 20 closed above the previous day high. Okay, closed above the previous day high and closed above the EMA 8. Confirmation bar. Gap up next day and we run up. Okay, EMA 20, well, a little below the EMA 20. Green bar, close above the previous high and the EMA 8. Confirmation. Retest the EMA 20, fine. Green bar, closed above the EMA 20 and the EMA 8. That's a confirmation. Then we run up. Okay. Touch the EMA 20. The next day, I did not get a confirmation bar. I retested the EMA 20. The next day, I get the green bar that closes above the previous day high and above the EMA 8. That's confirmation. We run again for a week. Back down to the EMA 8. And then here, we get the green bar. It clearly closed above the previous day high, but it's kind of, I guess technically it did close above the EMA 8, okay, but it wasn't clear at the level of zoom that we were earlier. But now I can see that it did close above the EMA 8, and so that is confirmation. Surge up the next day and run up. Okay, over here, tag the EMA 20. The next day, we close above the previous high and above the EMA 8, run up, okay? So if we come back to the EMA 20 and we get that confirmation bar, then I'm going to move from a 2 to a 3. Okay, without that confirmation bar, I'm still at a 2, and then if we break the EMA 20, then I am at a 1 as we head down towards the MA 50. Okay, so that's how that would go. Okay, good to see you. All right, so let's see. Let's take a look at the world right now, at least the market, and then decide on some positions for our example portfolio. So as I said, right now I'm a 2. Okay, so I shouldn't be crazy about going long right now. Well, I shouldn't be in a rush to get my 1 or get 2 positions on right now, because it could become a 1. Maybe not imminently, but in the next 2 or 3 days, it could become a 1. So I'm probably just going to put on 1 right now. And if I get that confirmation, then I'll go 2 and 3, if that makes sense. Or I could put on 2 and then put on a short so that I'm net long just 1. But I'm probably not going to do that because I want to stagger out. Remember, this is as if you just funded your account. And if you just funded your account, we're not going to be in a super rush to get all the cash allocated. We just want to just slowly build your positions up. And that way you get a staggering of expirations potentially, and potentially a staggering of exits of your of your trades. You don't want everything to start on the same day, end on the same day, because then you have this then you get a really jumpy equity curve. So we're basically just looking for one long position today. What it's going to be in, I don't know yet. I know that we're still bullish on the market, but I want to take a look at everything else as well. Everything that we would do in order to build up a proper trade and go through the trading plan. So let's take a look at TLT. TLT chopping sideways. It did look like it was potentially coming down and testing that MA50 and MA200. It is still just closed just below the EMA 8, so we're still in somewhat danger territory. So TLT is not giving us the warm and fuzzies for continued upward movement in the S&P 500, but it's not like a perfect correlation. It's not like, oh, the TLT is moving down and that's going to bring down the market with us. Right? Sometimes it flips. Sometimes TLT moving down is good for the market. It just depends on what's going on right now. VIX, looks like I've got VIX open already. And I actually don't like this view too much. There we go. That's a little better. So what we see is that continued movement upwards in the VIX, and that's flat top that we talked about earlier. Okay, so this is wedging. Oops. This is starting to wedge, and either it'll keep chopping sideways, or it'll break through that wedge, and then we might spike temporarily above 20 or 220 for a couple of days, or depending on how bad it is, maybe a week or two. But right now, I'm not seeing any reason for it to be sustained above 20 for more than a couple of days. And we got FOMC minutes tomorrow. Okay, and consumer sentiment. Okay, so it looks like we could get some volatility. It's definitely possible that we could get some volatility of what we saw from the rate cut decision. Was it last week or the week before? I can't remember. I think it was maybe the week before. What we saw from that rate cut decision was that they were not all in agreement with the cuts. So if we see Fed Watch and we look at the dot plot, what we saw there was, we barely had a majority. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, for the 25 basis point rate cut. A 10th person way down here for some reason. And then over here we got 1, 2 for keeping it the same. 1, 2, 3, 4, 5, 6, or 7 actually wanted to increase rates. So this was by no means an agreement. And it's not like some people were like, oh, let's just cut 25 basis points. And others are like, oh, let's just do nothing. We had people, a good number of people, actually pushing in the opposite direction. So that was 7 people pushing in the opposite direction of the 9 people who wanted to keep it the same. And if you add these, to lower it, and so basically you had 9 versus 9. Now, I'm not counting this guy. This guy's way out of left field. Okay, so 9 versus 9 right here. So it's by no means a super comfortable rate cut. There's definitely dissent inside of that cut. So depending on how the minutes go and just how bad that disagreement was, that could shake up the market a little bit, and it could be a catalyst to the downside. And it's either going to be, this is nothing that the market cares about, or it's going to be, we've got some serious dissent here. There's no guarantee, it seems like, that we are going to get the cut, an additional cut in October which right now the market says almost 95% chance probability that we're going to get that cut. And then December, almost at 80 plus percent chance, 81% chance of getting another rate cut by December. So that's really, really high. So if there's any reason for these numbers to come down more than a few percentages, then that will put pressure on the markets. And we'll start to see that pull back, at least towards the EMA 20 at that point in time. So bullish, but again, don't want to get crazy bullish. So that probably means I want to be in a sector that is not so rate sensitive in my bullishness, in my initial foray into bullishness. So I'm then going to go and take a look. There's a lot of other things I could look at too, like momentum in the markets and all of this. But for now, I'm just going to go straight to my sector because I'm already aware that I don't want to be in a very interest rate sensitive sector, and I'm aware that I want to be bullish. Okay, and I'm not jumping right to a 2 or a 3. I'm taking it one step at a time. So I don't care as much about momentum. If tomorrow's action brings me down to 1, I'm still perfectly positioned. So I'm not going to worry about that since I'm only taking one position at this time. So let's take a look at sectors. And since I'm only looking at one position, I'm really only going to look in the top 5 sectors. I have 10 listed here. I'm only going to look in this top 5. And today, food and beverage caught a bid, commodities caught a bid, XLP, staples caught a bid, utilities caught a bid, and then there are metals. So basically, the market has sort of the same attitude that I'm having, which is, oh, we might want to be in some more conservative type of sectors. So that's kind of interesting. Then on a 1 week basis, we've got wood, blockchain, pharmaceuticals, healthcare, EV. So completely different sectors than these. The only kind of conservative one right here is healthcare. Well, I guess wood is a basic material, and pharmaceuticals are actually more speculative. I wouldn't really call that healthcare. So a little bit different story on that 1 week basis. On the 1 month basis, we got wood, uranium, blockchain, metals, quantum computing. Then 2 month, lithium, metals, electric vehicles, wood, uranium. Lithium, wood, metals, cars, electric vehicles, uranium. Uranium, blockchain, metals. Okay, so metals is showing up almost everywhere. Metals, 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 metals. Metals is way down here. I'm not going to count that. Metals. So on all of them except for the 1 week, metals is in the top 5. Metals shouldn't be interest rate sensitive, so I might be okay with metals. The only other one that I saw, I definitely didn't see on the 1 day, but I did see quite often. I did see uranium quite often and wood quite often. Wood 6 right here, not 5. 4, number 2, number 1, number 1, not on the radar screen for it. So I'm going to take a look at wood and metals, or yeah, mining and metals. Okay, so let's look at XME or wood. I'll look at wood first. Wood is really down today. Am I looking at it backwards? Are these the least performing? It says top. Oh, wood wasn't on the daily list. Okay, gotcha. So there's a big pullback in wood today. And this is not looking bullish to me at all. At all. So I don't want wood for sure. I don't want to be long wood. That's not really okay. And so let's look at metals. Okay, metal, beautiful trend here. Looking a little parabolic, a little too far above the EMA 20, so it might be hard to find a good entry in this. This is probably gold and silver, a lot of gold and silver related stuff. So gold, if you were in the post-market review a few weeks ago, 3 or 4 weeks ago, maybe a month ago, when was this? No, it wasn't all the way back in April. I think over here in August, late August, we were talking about this breakout in gold right here. How we had this institutional pattern of accumulation and then a breakout. And it really has broken out with just a little bit of a pause right there. Other than that, it's really been moving. And this is part of a multi-year right here. So we had accumulation over here, a similar pattern right here. Okay. And then breakout. And then another one happened right here and a breakout. Okay, so that started in 2020 with COVID. We saw that pattern. And then if you really want to say, well, all the way back from 2012, you can say this has been one giant pattern, but I don't really care about that so much on something that spans, we're talking 20 something years. So I'm more interested in the near term. COVID started this cycle of people being interested in gold again and this accumulation. And then we had this major breakout 2024 all the way until now. Okay. And then 2025 April gave us another opportunity to really see that institutions are really interested in accumulating gold, and then a breakout again. So gold long term is looking very, very, very bullish. Just overextended right now, very overextended. So it's tough to justify going in right now. Pullback is basically what we're saying. So let's see what is in metals and see if there's anything reasonable that we could get into. So it just may not be the right timing for metals at the moment. Okay, there's a good number of these, so I'm going to download this. And where'd it go? Okay, I'll throw these into a list. Okay, LEU looks almost exactly like XME, overextended. BTU does not sound like it belongs in mining and metals, unless they actually do something like, oh, that's weird. They are in there. Oh, I guess maybe mining related. Okay. What's really interesting about BTU is they showed this pattern also. An accumulation pattern, broke out of the MA200, pulled back and retested the MA200. Then it did this little breakout right here and it just took off. And you can see Friday, so I have this marked as up to October 17th. I have a very, very profitable position in BTU right now. That started right here with this breakout. I actually thought it was breaking out here. And I was wrong for a week. It pulled back a little bit and then it broke out. But that was really profitable. So that's the power of institutional accumulation. Once it pops, it really pops. It really rips. So that was what's happening in gold as well. Like gold, once that popped, it really popped. Okay. So if we can find something like that, that'd be a great start to the portfolio. But I think most of those are at the way that metal XME is looking, everything's probably overextended. We're probably not going to be able to find something, but this is the best place to look for it in and then we'll move on to other sectors if we don't find anything. Okay, CNR, actually, okay, so CNR is early in that process, starting to break out. So if we get a pull back to the MA200 or similar, or like EMA20, that'd be a nice bounce and move upwards. AEM, gold related. Okay, maybe this is gold related, pulled a little bit below the EMA 8 today. So I definitely would like a confirmation bar before I go into this, especially since that was quite a run right here. Okay, but AEM can go on a separate list. Let me track this on a notepad, because normally I'd throw it on a watch list, but we're using a watch list. So AEM, we could take just a reminder of that. CDE, so technically CDE, same thing, right? Except a little bit stronger than AEM because the EMA 8 actually held. Okay, so I'd actually be a little bit more interested in CDE than AEM. So I'll put CDE on that list also. CNR, if we get a pullback to the MA200 or EMA20. MP, is a weak. Okay, longer term trend, reversion, short-term trend reverting to the long-term trend. It's a weak one because, come on. You see that? A couple of days ago is when it reverted. And it's weak because everything's kind of curling over and looking like it's starting to go sideways. So I'm not super enthusiastic about that. But technically, yes, it is looking like a bounce right there. But I'm going to leave it off my list for now. CLF, nice trend right there. Didn't pull all the way back to the EMA 8. So this has been the strongest one out of the metals that we've seen. And it did break out and retest. And then go back up. And so if it breaks right here, actually, it will be interesting to me. About 1290-ish. 1290. So if it's able to close above that 1290, and especially if that low is able to be above the 1290 level, I'll be very interested in CLF. Okay, so CLF above 1290. Alcoa, I drew these levels from before, is looking like what I talked about. Accumulation by institutions, a breakout above the MA200, that failed pullback retest the MA50, and then it's starting to go up and it's about to break another important level right here. We did break above it today, and all I need for real confirmation now is for my low of the day to remain above this 35 level. So Alcoa is looking excellent. Alcoa is ready for early / anticipatory entry. And I may want to wait for a confirmation. Okay, so unconfirmed. This is unconfirmed, but so I'd be jumping the gun a tiny bit if I go in right away. But if we can get that low to be above that, then that will be confirmation. Technically 2 days with the low above the level, but a lot of times, especially with this pattern, it could just run away. And so then you're too late again. It's like, oh, now I have to wait for a pullback. So I don't mind being a little anticipatory for this, but just recognize that if we do that, then the probability is a little bit lower. Okay, so AA is looking really good. NEM, I'm in a position already in other portfolios. HCC, you have a similar, very ugly, not clean at all accumulation right here. Break above the MA200, back below, bounce off the MA50, take off, consolidation, and looking like it's trying to break out again. So we're accumulating across this, or we're chopping across this. Same thing, accumulation. Okay, so technically a week ago we broke out, but now it's the retest of that level and the EMA8. HCC could be good. It's really ugly though. It's trading and all the wicks and gaps and all of that is ugly, but it is following a very powerful signal of institutional accumulation and breaking out, just like I showed you a few times already. So if you're okay with ugly swings in your reported P&L on a daily basis, unrealized P&L, then this could be really good. So I'm going to throw that on the list also. HCC, breakout. Oh, sorry. Wait for breakout confirmation. And this one for sure I'm going to wait for confirmation because of how choppy its trading is, right? And how big the wicks and all of that are. So for sure I would wait for a confirmation here. STLD, let's see what you guys are saying. For morning payouts, why isn't it more advantageous to get a fresh GEX rating first thing in the morning of the trade and base the trade on that versus prior day floor close data? Because if you did that, then you're doing a 0 DTE trade and there's just not that much juice in the trade. You're not going to, your profit target would be much lower than what we have in the program. So it's just not going to be that lucrative. And then unless you adjust your stop loss as well, then your reward risk ratio is really messed up. So generally, by the open in the morning payout program, we've already made 4 to 7%. So this morning, when it opened, it was up like 5 or 6% before that sell-off, and so you give up that buffer if you do that. STLD. Not bad, actually. EMA8. It's just, again, not the cleanest moving stock. So STLD is ready, basically, now. Ready, but, wiki. HL, there's a lot of these. HL Mining, Hecla Mining, it's looking very good also. HL. Okay, but if I'm going to be okay with this, I'd rather be in CDE, where it closed a little bit above the EMA8. So yeah, I'd rather be in CDE. Our gold broke below the EMA20 a little bit. This is UEC has been really choppy, ugly trading. I'm in a position on it and it's just chopped sideways for a little while. CMC, same thing. NUE, not looking that good. This should be a candidate for the downside. FCX, same thing. AMR, break above the MA200, retest, bounce. Okay, so this is a less clean. Yeah, no clear sign of, oh, actually, yeah, a little ugly accumulation here. Break above. So similar pattern that we've seen, can really run up, but just not nearly as pretty as the one we marked, AA. Okay, so this is like picture perfect. This is looking really, really good. So I'm leaning towards AA at the moment. Okay, overextended, tiny bit overextended, broke its EMA8, overextended, chopping sideways, overextended. That's just nothing. Sideways, overextended, ugly. URG. Okay, so we've seen a lot of these here where we break the MA200, run, and pull back. This one, in this case, the MA50 moved a lot faster. A lot of them that we've seen so far, the MA50 was still down here, and it pulled back and retested that MA50, and then it took off. Here, it just bounced off of that MA50 and really went, and now it's kind of trading it off of its EMA8, which it did today also. It's still a little overextended though, and it's another one of those where it's very wicky. It's not very clean action, but if you're okay with volatility in your unreported or your unrealized P&L, then it's fine. RYI, MTUS. Okay, so AA, I'm okay with doing an anticipatory entry into AA. That's looking really good to me. It does have earnings. I want to be aware of that. So this is not going to be a short-term trade for me. If I want to trade this, either I'm going to hold it to just before earnings, which would be, I guess, Wednesday the 22nd. I guess I could do that. That'd be a short-term trade, maybe a 1 week trade. 2 weeks max. Yeah, it would be just barely 2 weeks if we went into this. So do I want a 2 week trade, or do I want like a 1 to 2 month trade? This looks good for a longer term, I should say. Long term, like several months. But I'll take it a couple weeks at a time. So this may be something that I would say, okay, I'll trade it for 2 weeks. Then when I have ideal entry again, I'll trade it for another 2 weeks. And then when I have an ideal entry, I'll have another 2 weeks. It's something that I can come back to over and over again. So I think I'll do it that way. Okay, if I'm going to do it that way, then I've got to decide on my expiration. It's either got to be the 17th, which is really close, or it's got to be the 24th, but I close it early on the 21st or 22nd. And so because of the shorter term nature, and because I'm anticipating, I don't have confirmation of it moving upwards, I'd rather go into it as a debit spread. That way, if it just chops sideways a little bit, if it comes back a little bit down, then I'm not going to worry too much about it. So I'm going to look for a debit spread. So I'm going to sell the 35. And then this is probably $1 wide, maybe 50 cents wide. I'll do 34.35 out to the 24th, just to give it a little bit more time. If it just chops and doesn't really do anything or slips downward, then I don't have a lot of recovery time up in 17. So basically if it doesn't just go up or at least stay above 35, if I go to 17th, then basically I have to cut my loss right away. If I give it that extra week, then I could say, okay, it can chop over here a little bit below 35 for a little while and then move, or at least for a couple of days, 3 or 4 days, and then move upwards. That would be okay also. So it gives me a little bit more leeway. I just won't expect it to hit a maximum profit because I am cutting it short. So I think I'll do it that way. And let's take a look in our paper account. Just remembering that in the paper account, the executions aren't, especially for verticals, are not perfect. They'll basically just give it to you, right? So we just have to understand that in terms of performance, the paper account is not perfect. It's not necessarily representative. And especially since we're doing everything after hours, we're not seeing ideal entry during the day, ideal exit, or anything like that. So this performance is going to be deviated from real world performance. It's going to be worse than real world performance. just so we all understand that what the exercise is and what this performance would actually track. AA, 24th, 35. So let's go 34, 35. Let's see if that's lucrative. Yeah, if we could get in at 56 cents, even if we say 40 cents, that's 66% max potential. If we held out to 24th, we want to avoid earnings, then it's probably more like 40-ish%. So let's model it out. Can you explain the difference between a weekly option and a normal option? Yeah. So basically, a weekly option, the only difference is that the quote unquote normal option is a monthly. It's the monthly expirations. Okay? And the weekly, they're the exact same. So why would you prefer one or the other? Well, usually there's a lot more volume in the monthly option, and you're more likely to see tight bid-ask spreads on the monthly option. Some symbols are so liquid that it doesn't really matter. You go to a weekly or monthly, there's not a huge difference. But even if we look at SPY, okay, if I go to a weekly expiration, which would be Friday, and if I look at the money, does this thing have... Okay. If I look at 670, for example, at the money, then we've got 6,900 open interest. We've got 21,000 in volume. Okay, if I take a look at the monthly, 30,000 in open interest and a little less volume, looks like we had, but that open interest maintains the higher. Okay, here we have 3-cent bid-ask spread, and then on the 10th, we have a 3-cent bid-ask spread. So in SPY, it's super liquid. So even the weeklies and the dailies are very, very tight bid-ask spreads. But the difference is in the volume in the open interest. But if we're talking about AA, for example, what we were just looking at, we'll probably see a reasonably large difference. So if I go to 1010, okay, that's a 6-cent bid-ask spread, 4,000 open interest, 2,000 volume. Okay, and over here, 8-cent bid-ask spread, so not huge difference in terms of the bid-ask spread. And actually, we have less open interest and less volume in the monthly, which is interesting because that, like I said, that's usually not the case. Usually it's the other way around. And oftentimes it can be very, very significant. In AA, for whatever reason, people want to trade this short term. So let's see if I do the following weeks. Okay, you see now here's where you see that big difference. Okay, the further expiration. Here you have 21 cents bid-ask spread and only 180 open interest and 300 volume. So there's a big difference between this weekly and that monthly expiration. If I look at November 14th, we see that again, 43 cents in bid-ask spread and 20 open interest, 2 volume versus the 21st. Okay, that's only 4 cents bid-ask spread and thousands of open interest and volume. Okay, so that's the major difference right there. Right, we see that the nearness of the expiration makes helps determine that also. Okay. All right, so 24th, 34, 35, we're modeling it. Okay. For the 24th, 34, 35, and if we hold it to the 21st, just say 2 hours before market close, roughly, okay? You see that we can't really reasonably expect that we'll get a lot of profit back, 20 to 40%, right? Depending on exactly where Alcoa is. If it moves up a huge amount, then yeah, we'll get close to that profit. And I was assuming that we could get in at 60 cents, okay? Okay, so we max out at 66%, and at between 15 to 40-ish% is what I would think would be reasonable. But it could run up, it could go really high. So because of the pattern that it's in, it could just run upwards. And so if it made it to say $40, excuse me, then it could, right? It could make 65%. It could make it pretty close to max. So that's the risk that we're taking. So I like that. We put that in at 56. Even if it's up to 60, that's fine. But I'm going to put in 56. Okay. Cool. Any questions about how I arrived at this? Why I'm only going into one? Why it's a long? Why it's in metals? Why it's AA specifically? Are we clear? We have our trade idea developed. We have our timing. We have our execution. We have I guess we don't have our plan. Okay. At least not fully developed. Let's do our plan. Okay. So we're out by, so this is the expiration we bought, but we're out by this day, a couple hours before the close. So I'm going to make that green. Okay, this 35 is my max gain zone. Okay, my max loss, excuse me, is at 34. My break even, assuming we can get in at the price, would be 34.56. I have a tiny bit of wiggle room in terms of how far it can go down by expiration and still be in profit, and which is why I have the high reward to risk ratio, high potential profit. Okay? And so basically, I'm going to say as long as we maintain above, I'll just say the max loss zone in the next few days, we'll stay in the trade. If at any point we break and close below the max zone, then we'll just take the loss. And then otherwise we're in the trade for all the way to the time stop. Okay, there's no target because this is a debit spread. All we care about is that somewhere above this purple line. Okay. Can you comment on the significance of the huge spike on today's last 5-minute candle? Okay. So you're wondering about this big spike right here. And I would say it's not significant whatsoever. Why? Because it's the last volume bar of the day. And look at this one, about half the size, but look at this red one. I guess this was this was midday. Okay. So the volume at the last minute, it doesn't mean anything to me. Because if I look at any stock, look at the SPY, isn't that a huge volume bar at the last bar? I guess 5-minute is what you asked. Okay. Is that a huge bar on 5-minute? AA, huge bar on 5 minute. Microsoft, huge bar. Apple, huge bar. Right? Pick any major stock, not a small cap stock, but pick any institutionally followed stock is going to be the same pattern. So I don't know, what else do you want to look at? Nvidia, same thing. Tesla, right? Less significant, but relatively large bar, same as these larger ones over here. Yeah. So the last minute, the volume on the last bar of the day never really means anything to me. Okay. Any other questions? We clear on how we got to that position and ended up wanting to add it in our portfolio and the exercise of constructing the portfolio? All good? Okay, I'm not seeing any questions come in, so I guess we're good. All right. Have a wonderful rest of your evening. I'll see you guys tomorrow. Hopefully you guys are interested in this portfolio construction and excited about seeing how that turns out. I know I am. So, well, that's it for today. We'll see what tomorrow brings, both for Alcoa and the S&P 500. Again, we just really want to see if that EMA 8 holds, and if it doesn't, whether the EMA 20 holds. At this point in time, I'm not really anticipating that the EMA 20 wouldn't hold, but if there's some really weird, crazy thing in the FOMC minutes, then yeah, that could send it tumbling below the EMA 20. Okay, so I'll leave you guys for tonight. Have a wonderful rest of your day, and I'll see you guys tomorrow. Bye everyone.